Hello, I'm David Mandy, President of O&M Partners. I want to welcome everyone this afternoon to Quisitive Technology Solutions Town Hall Call. For background information, Quisitive trades on the TSX Venture under the symbol QUIS, and they also have an OTC listing in the United States under the symbol QUISF. For those of you that are new to these broadcasts, this event is brought to you by New York-based O&M Partners. We're a marketing communications company in the business of bringing public companies, managements of public companies, investors together in real time and helping investors make better informed investment decisions. We want to answer everyone's call today. Please feel free to go to the GoToWebinar question pane, or you can text in your questions, or you can email them in. And we promise to get to all your questions. If we don't, we'll, at the conclusion of the call, we'll be sure to get your questions answered and get back to you. Before we turn to our host today, Mike Reinhardt, it's a real pleasure to start with our guest speaker, Phil Sorgen, who is the Corporate Vice President of Microsoft. Phil is an independent director on the board of Quisitive. He's also currently Corporate Vice President at Microsoft. He's a 30-year industry veteran. Spent the last 24 years at Microsoft in many various executive roles. He has extensive experience helping both enterprise and small and mid-market business transform. He's helped Microsoft's highly valued partner ecosystem develop the deep expertise needed to help customers across industries leverage the value of Microsoft's public cloud offerings. He's here to give us generalists some market context to help us understand how Quisitive Technology Solutions fits in and what they have to offer. So it's a real pleasure to turn the call over to Phil.
Thank you for the introduction. To start this session, I'd like to accomplish three things at a high level. First, I want to frame the size of the opportunity associated with companies, large and small, that are digitally transforming their businesses. Second, I'm going to highlight what companies are actually trying to do when I say they're digitally transforming their business. And the last thing I want to cover is what differentiates a professional services company or a system integrator that is focused on helping these companies. Now, I want to start by pointing out the worldwide opportunity associated with companies that are digitally transforming their business. IDC estimates that the economic value of the work companies are doing to digitally transform their business will exceed $20 trillion, or 20% of global GDP. Now, to realize these benefits, companies will spend $1.7 trillion in the next 12 months. Now, this, of course, is an all-in number that includes all the technology and related services and people to implement and manage these digital initiatives. Now, the numbers are really large because 60% of all enterprises have articulated an organization-wide digital platform strategy and are in the process of implementing that strategy as the new IT core for competing in the digital economy. These, of course, are market estimates based on the study referenced on the slide, but there's no denying that the opportunity is large and that professional services and the intellectual property, or IP, that these organizations create will play a key role in defining and executing on customer roadmaps for digital transformation. Since I talk about a large market with wide-scale business participation, I think it would be worth framing what customers are trying to accomplish when we talk about digitally transforming their business. Now, I've had the distinct pleasure of talking to hundreds of customers over the last few years about what they're trying to accomplish when they talk about digitizing their business. At a high level, it really comes down to four things. Different people might describe it in different words, but it's really semantics. Companies across industries consistently reference these four focus areas. Now, I always start with people, since most business leaders view their people as the single sustainable competitive advantage and a resource that is generally capacity constrained. As a result, all customers are trying to empower their employees to be more productive when working in teams, more mobile in how they work, and more flexible in how they communicate. The second area is about connecting with their customers. The greatest asset here is leveraging the tremendous amount of data that they have about their customers to consistently engage them the way they want to communicate and to bring the right resource to the right opportunity at the right time. The next area is to leverage the scale economics associated with hyperscale cloud offerings to truly optimize the operations within a business. While this can lead to significant cost savings through increased efficiency and streamlined operations, it also helps shift the percent of a company's IT spend from running the business to innovation, which can really lead to business growth. The last area is how customers are literally transforming their products. This can be new approaches to product development, new routes to market, and new revenue streams. What brings so much potential to these four areas is first and foremost data at the core. You see, data is the new currency in a digitized world. The ability to take advantage of AI, machine learning, and predictive analytics with the incredibly large data sets that many companies have, but haven't historically been able to leverage economically, is a huge enabler. With hyperscale cloud offerings, companies can leverage these public cloud platforms and SaaS offerings from companies like Microsoft to do things they could never have done before. The problem is that they don't all have the know-how to take advantage of these cloud offerings. That is where there's a huge opportunity for the IT channel or professional services organizations to help them. But there are many professional services organizations out there, and I think it's worth highlighting what differentiates the companies that will be in the best position to capitalize on this opportunity. Now, all professional services organizations are continuously working hard to transform their businesses to capitalize on the market opportunity that I highlighted. I just want to share a few points that I believe will differentiate those that have the best opportunity to drive the greatest revenue and margin growth. You can see that I labeled the left side of the slide as table stakes. Now, this doesn't mean that these companies are running a bad business. Quite the contrary. My starting point are the companies that have a great track record of strong services delivery, have the necessary vendor relationships to take advantage of the core benefits that these vendors provide in their partner programs. They have a strong focus on the customer and see repeat business as a result. And lastly, they've started to deliver on cloud-oriented projects. I can assure you there are many companies that can't check all of these boxes. But if I'm framing an IT channel partner that will be successful in this market going forward, this is the bare minimum. And this scale that I show on this slide is what will help differentiates what will help some of them thrive. Now, the first level of differentiation that I would highlight as you move from left to right on the slide is in the category of excellence in what they do. I highlight depth of employment capability, which can be captured in terms of certifications. I highlight recognition in terms of awards that the companies receive that show they stand out in the vendor's partner networks. It can also include their engagement in specialized programs with these vendors, like advisory councils or national programs. The last would be how diverse they are in terms of market and industry. But what provides the greatest differentiation are the areas I highlight on the right side of the slide. It really calls out whether they have a culture of innovation and whether they are building first-party IP that they can monetize either as a product or as a SaaS offering, or it's IP they can leverage to de-risk projects and accelerate their sales efforts. The key here is that the repeatability of first-party IP is highly accretive to margin growth. It also differentiates on the cloud work they are doing. The cloud is a broad category, and these advanced solution areas earn higher bill rates and tend to be connected to longer-term projects. They are also where first-party IP can be leveraged for the greatest return. You heard me mention that data is so key to all the pillars that reflect what customers are trying to do. I mentioned that on the last slide. And having those skills around data and AI are truly market expanding. Lastly, I'd call out vertical knowledge and/or IP and a growing annuity base of revenue from both first and third-party sources as key differentiators. These companies in the IT channel are key enablers in helping customers digitally transform their businesses, and those with the attributes that I highlight as market leaders have the greatest chance to outperform their peers. Thank you.
Thank you very much, Phil. Now we're going to turn to our host, Mike Reinhardt, Chief Executive Officer of Quisitive. He founded Quisitive in 2016 and serves as its Chief Executive Officer and board, and also the Board of Directors, Chief of Board of Directors. I'd like to start with Mike's. Really, it's his passion, his relationships, his experience working with Microsoft that's driven him to create the Microsoft Partner of the Future vision. It's a vision which is being executed through a defined M&A strategy to build the premier Microsoft partner in North America for business solutions and cloud innovation. So that's where we're going. Now to tell you a little bit about Mike's background. For more than 20 years, he was a leading national Microsoft IT service firm. He worked for more, and he's prior to founding Quisitive, he was the co-founder and president of RBA Consulting, which he provided the vision and strategic direction for. Mike's previous experiences also includes serving as vice president of the Microsoft National Practice for Foreign Information Services, and working at Medtronic, where he was responsible for IT strategy and technology implementation for corporate shared services and international systems. For more than 15 years, Mr. Reinhardt's IT services companies have been part of the Microsoft National Systems Integrator, the NSI program. And he's won numerous partner awards, and most recently was named the Microsoft US Country Partner of the Year for 2019. So it's a real pleasure to turn the call over to Mike.
Thanks much, appreciate it. Thanks for the time today, you guys. Appreciate everybody taking some time to hear a little bit about Quisitive, and I think Phil gave a good context to this opportunity in the marketplace, really centered around how do we build and grow a business to partner with Microsoft, as well as create new value for customers as they embark upon this digital transformation journey. I've got a variety of things we'll share with you here today and kind of walk through, and then we'll open it up to questions and answers after. I've got the obligatory forward-looking statement slide here. We won't spend time on it. Feel free to go to our website to take a look as needed. What I'd like to start with is sort of this mission that we have, which is really about building this premier Microsoft partner in North America for both business solutions and cloud innovations. And Phil set some good context here about what market leaders look like in building out capabilities when you're going to market in a partnering model and helping organizations use the cloud to realize their vision. I call that building the partner of the future. It's really changing what the makeup of what these companies look like, and moving from the left part of that slide where he talked about kind of table stakes to market leaders. And we think that Quisitive is well positioned as a market leader. And there's really three key elements we look at in how to build that out, and similar to the things that Phil talked about. First is this first party cloud-based software products, bringing those to market that bring new value to customers, create recurring revenue base for our organization at higher margins. And we'll talk a little bit about what that looks like in our business and how we're building that out. Really, a big part of this focus is helping customers in this journey to the cloud. We'll talk about that more in a minute, but it's not an event. It's not one day you're not in the cloud and the next day you are. It's this continuum of a journey, and we'll talk a little bit about what that looks like, and really being a thought leader to help them then innovate and use the cloud in unique ways to build out their business. And then lastly is, as we build this partner with Microsoft, and we'll talk about why Microsoft along the way, but we see this incredible opportunity to take all this great technology that Microsoft has across many, many spectrums and use that to help our customers really derive value from the cloud to modernize their business, create new revenue streams, and drive their future. Our business model is kind of broken out into a few different elements, and we'll focus in on this. I mentioned this customer cloud journey. Customers are in this process where they need to first move to the cloud, and we're very early. I use the analogy, a lot of people ask me, where are we? If it's a 9-inning game, we're in the first inning. It's really this very early stages where customers are making this move. I'll be honest, the current events in our new remote life model driven by COVID-19 is accelerating this move, and we're starting to see that happen and continue to expect that to be a big focus in the coming years ahead. But as they're moving to the cloud, then we need to help them operate in the cloud. Operating in the cloud is a very different model where now they're no longer owning their own infrastructure environment cloud services. Microsoft or their cloud provider does that. So now they can really free up their resources and their investment in discretionary spend to start to invest in innovating in the cloud and really taking advantage of all the things that Phil mentioned around data, machine learning, AI, and analytics that really create new business value. The way that we do that is really around 3 different services. One is a set of project services where we help organizations understand their journey to the cloud, do an assessment, create ROI, roadmap. We've got some IP to help make that happen. Then obviously we work hard to help them actually make that move to the cloud. And that can take several years for an organization to make that journey, but we help them do that through our expertise in the cloud, the repeatable IP that we create to do that efficiently and effectively, and help them take advantage of that. Then within that, we also have some very important services that are recurring in nature, some of which are about, first of all, we're the licensing arm for them. As an organization chooses to use Microsoft's cloud services, we actually are the reseller of their platform. We get margin contributions on that, anywhere from 15 to 30 points of margin by being the agent to really service that customer, invoice them for their services, and obviously getting compensated from Microsoft to do that. We also layer on top of that managed services where we help organizations as they're in the cloud run and operate their business, again, in a recurring revenue model. And then lastly, we identify and create these first-party cloud offerings that I'll talk more about that and how that drives our business. Then the last piece is what we call solution services. And this is now that customers are in the cloud, how do they really think about creating new capabilities and getting new business outcomes driven through data analytics and integration, and really optimizing and understanding how to convert data into insights for their business and using the cloud capabilities to do that. Certainly modernizing applications and thinking about how to really bring new value to their customers, to their employees, and really help engage that model across their digital transformation journey. We're capable of helping them across this entire spectrum, which is a key piece of how we partner with and through Microsoft. I'm going to first talk a little bit about what I call inventing the future. Inventing the future is where we work with these customers and we identify these patterns that exist inside of businesses. We see those as opportunities where we can create what I call first-party IP that we're going to sell as cloud software offerings in the marketplace. We at Quisitive today have 2 of these. One is an M-Perform product that is through one of our divisions, CRG, that we actually had bought through an acquisition strategy. And this is all about employee performance management and really understanding how your organization is performing and doing 360-degree view, capturing, and really interestingly, this has been a very successful product for them, recurring revenues that are on 3-year subscription agreements, 60 to 70% margin contributions, and auto-renewing kind of from there. And for us, it's a growing business. We've grown it over 15% since we acquired their company in June of last year. And we actually see a great opportunity in the context of the coronavirus and how remote work is changing how people interact, and many companies looking to leverage this as a platform to better engage their employees and understand and measure performance. Secondly is a concept called LedgerPay, and LedgerPay is something that we've embarked upon for the last 3 years to really disrupt an industry around payment processing, but also create a new capability around payment tokenization that I'll talk about. LedgerPay is really, our mission is to disrupt the status quo and really transform this industry from what is considered a tax to many merchants that I'll talk about, to really provide these actionable experience for merchants and their consumers, leveraging cloud-based payment processing along with data analytics empowered by payment tokenization that we bring to market. So I'll talk about this industry problem. There's really 2 key problems that we saw through our experiences as we work with customers. One is on the right side, that payment processing, every merchant needs payment processing. And there's a lot of layers in this. There's obviously the Visa, MasterCard network associations that charge their what are called interchange fees. There's all kinds of layers between that Visa or MasterCard provider and the consumer and the merchant. And all those layers are charging fees associated with that to the merchant. And really, at the end of the day, the merchant views that as a non-value added tax that really puts strain on their already compressed profits. And we'll talk a little bit about how we think the cloud is an enabler to disrupt this very antiquated industry and create a scalable model at better cost. Secondly, there's another dynamic that's a very powerful one that we observed in this pattern of understanding business, is that merchants have not been able to offer real-time relevant products and promotions at the point of sale because I can't identify who you are. We all think of the world in the new e-commerce landscape through Amazon. Amazon knows who you are, what you've bought, what you've looked at, what others like you have looked at because of that rich online experience, which is great, and many merchants have that. But a large percentage of them don't, because they actually operate in both a brick and mortar and a commerce world. And we'll talk a little bit about what that market looks like. That data and information is falling on the floor today. And we see the opportunity using the cloud through our payment processing and a payment tokenization process, a way to activate that. So let's talk a little bit about this market and why do we think it's meaningful and relevant. So again, as I mentioned, all merchants require payment processing. It's over $150 billion business today based on this data. It was $144 billion in 2016 at processing over $178 trillion in payment value, which is now in excess of $200 trillion, with it growing at 8% per year. The really interesting thing is 90% of all non-cash transactions still happen at a brick and mortar. If this morning you got up and drove through McDonald's and bought a drive-through, which everybody's still doing quite a bit of based on all the data I see, and bought an Egg McMuffin and a coffee this morning, and then this afternoon you on your way home picked up Happy Meals to take to your kids, they actually don't know that it was you that was there. We'll talk a little bit about that, but that's where you think about grocers, dollar stores, convenience stores, restaurants, all of those. Even in today's climate, 90% of those transactions all occur in a brick and mortar rather than an online experience. And they lack that rich identity and understanding of who you are and how you interacted with their brand. So we built a platform called LedgerPay. And LedgerPay is a payment processing platform that does the things that payment processors do. They collect the transaction information at the point of sale. They transact that, integrate with Visa, MasterCard, and others, and do the settlement process with the merchant's bank and the card issuer bank, and settles that. And we do all of that. We do it at scale, leveraging the cloud, and are the only cloud-enabled payment processor in the market, and leveraging Microsoft Azure as a key component to do that. Secondly, we have a process we use called data and payment tokenization, where we take the payment type and now we identify who you are. Now take that example about going to the drive-thru this morning. You pay with your Visa card or your debit card. We tokenize that identity and serve it back to the merchant. In this case, maybe it's a McDonald's or other fast food restaurant. Now, when you come back this afternoon, we can empower them to know that it's you again, based on that tokenized identification. And they can then act on that and do targeted promotions to you, either at the kiosk or on a printed receipt or other mechanism, which today is a complete blind spot for the merchant. As Phil referenced, data is the new currency. We call it the new gold. And one of the things we recognized is now that we can activate and make this real-time data available at that point of sale, we found a partner in a company called dunnhumby. dunnhumby is the global leader in retail data science and analytics, and they work with the major brands around the world to take this data and information and use it to create these targeted promotions for CMOs and marketing organizations, as well as selling that data to manufacturers like Pepsi and Coke and Unilever and Procter & Gamble, who pay billions of dollars to get this rich insight on the consumer base. When we met with dunnhumby and talked about our tokenization process and how we enable that, they told us that covers a 20% blind spot in their current analytics and allows them to enrich and enhance the value back to merchants. And we've created a go-to-market model with them where they will share with us in that. So we have this opportunity to really disrupt this industry, both through the technology at a lower cost and making it at scale using the cloud, as well as activating a whole new data source for these merchants to be able to have insights and partnering with a market leader like dunnhumby. So I just want to touch briefly on this idea of kind of how this works. If you think about somebody going to a basket, going to a store, and at the point of sale, they got a $20 sample basket, they're going to pay 70 cents to a Visa, MasterCard. That's called the interchange fee. And then there's going to be multiple layers of other fees. They're going to pay a payment processor a fee on that transaction. They're going to pay a gateway fee. There may be other fees to someone like a Stripe or other merchant that's aggregated it. Really, the focus that we have LedgerPay is we take and we consolidate those middle layers, connecting that, and we can do this at scale to really create a high value for customers at a more economical price. And we're leveraging that through the Microsoft Azure cloud and how we enable that with customers. So we really have two ways that we will make money. One is centered around payment processing, as I just described, making a value on every transaction. Secondly is around this data and payment tokenization that we enable this rich insight that we create value both to merchants as well as back through to channels like the large CPG organizations that I described. Our product, we think, is unique. If you look at the competitive landscape across these and the different features and capabilities, we're not only a payment processor, but provide tokenization services. We're currently working with Microsoft and co-developing a set of services around marketplace signup so that going into the Azure marketplace, you would identify and select that you needed to have payment processing. You would select your point of sale. You would select the different ERP solutions that you might have connectors into, which we're building jointly with them, in particular their Dynamics cloud platform, and activating that and deploying that into an Azure model to allow payment processing, data tokenization, and rich services to occur across that. We can activate things like loyalty, gift cards, purchase cards. We can do ACH payments for B2B. We're working with other companies to actually process large payments from across payables for large B2B transactions using ACH processing as well. So we have this really rich set of services that we bring to life, both in our direct product that already exists, as well as future development we're doing jointly with Microsoft, and then have a unique partnership that we're activating with dunnhumby to go to market. So if you look at our competitive intangibles in this space, obviously Microsoft is a unique partner for us. They're a leader in the cloud environment we'll touch on briefly here in a second. They're actually doing co-development with us, which is the first time that they've done that with a partner, but because of the rich history we have with Quisitive and relationships and their belief in what we're doing with LedgerPay to really disrupt this industry and for us to be doing it in their cloud, they view as a great strategic advantage for them. And we're working across many different initiatives helping drive with key customers such as Walmart and others as we go to market. We're obviously continuing to leverage the strategic cloud architecture to really enable this to be a scalable platform. One of the challenges with historic technology is very proprietary, very controlled, and very difficult to create scale. The cloud enables that. Obviously, our combination of Quisitive and our consulting services allow us to be able to bring to bear not only this great fintech capability in market, but all the things that have to happen at the merchant to be able to integrate in with the point of sale and tie into ERP and do those things. We have a full service capability to do that. And then lastly, our relationship with dunnhumby really allows us to engage and connect with very different kinds of conversations and gives us brand permission to bring that together with both of us. So our go-to-market, we launched the product just last month. You can see news releases on our website that show that. We signed our first customer contract that was a significant multi-million-dollar deal that just occurred 3 weeks ago. You'll start to see that revenue from that business show up in our second quarter releases. We're now in process of doing this co-development with Microsoft that I described, as well as then the joint go-to-market that we launched last week with dunnhumby to add tokenization to their portfolio customers, and over time actually becoming our own bank sponsor with our ability to aggregate merchants and bring together a complementary focus and be a payment processor at scale across many different footprints. So that's kind of the IP play around LedgerPay, and certainly open to answering questions when we get to the Q&A on that. I did want to touch briefly on the idea of this notion that what we're really working to do is also reinvent the present, and that's this Microsoft partner and helping organizations move to the cloud and drive to that new vision. As Phil mentioned and David talked about that, we are the 2019 Microsoft Partner of the Year award winner that really differentiates us as we help drive value for Microsoft and activating customers' digital transformation using their cloud. Really, that cloud realization is through this fact that there's lots of complexity across Microsoft Azure, Microsoft Dynamics ERP, and customer relationship management, Office 365, collaboration, and Teams. All these capabilities that exist that create a complex set of things for a customer to deal with, and they need a strategic partner like Quisitive to help them move to the cloud, operate in the cloud, and ultimately innovate in the cloud to create new value. So why do customers choose Quisitive? We're one of a very small group of partners selected by Microsoft in their top 0.01%, that is in their National Systems Solutions Integrator program, which is an elite program that provides funding and access to key things with them. We're one of the very few that helps them across all three of their cloud. Many of their organizations are very fragmented by each of these separately. We bring them all together so that, again, in a customer's journey, we can help them make that happen. And then we have this really rich understanding about how to innovate in the cloud, which is really where the value is realized most for our customers. So part of our strategy as we think about moving forward and growing the business in this dimension is an M&A play where we look to bring together companies that are in $10 to $50 million annual revenue, EBITDA contributions 8 to 12%, scale and reach geographically, continuing to enhance our depth and breadth of services. At the same time, doing organic growth. Kind of, you can see on the right side where today, the blue represents kind of the organic growth of the business, and you start to see the impact of our projections in the end of the year as well as first year based on acquisitions we've executed. That leads me to this slide that kind of talks about our journey. The company's only a 4-year-old company. We went public on the Canadian market in August of 2018. We've done a couple of acquisitions. We've launched the LedgerPay product just recently. As we sit here today, $42 million business with 22% recurring revenues, roughly 14% EBITDA, over 300 employees. We have 8 North American locations, an offshore development center in Hyderabad, India, to give us labor triage capabilities. And these revenue numbers don't reflect any of the LedgerPay contribution. This was pre-launch of that product. So real quick on the Microsoft partnership and why we think they're the best partner to go to market with. I really focus on this idea of purpose-driven partnership. Lots of people put logos on their website to say they have partners, but purpose-driven partnership is about being fully aligned to help both sides win. And we have that with Microsoft in a very unique way. They give us leads. Over the last year, they've introduced us to over 150 of their customers. And the reason they do that is because of the breadth of our services, our dedication to their platform, knowing that we win or lose with them. And we're really able to position to help them deliver their technologies to these customers to have them come together and bring value to the customer. We see this increasing level of value through that process, and we keep adding both our services capabilities, our scale and reach, our depth and breadth of the Microsoft technologies, and then complemented by this cloud-based software that we build, like mPerform and LedgerPay, that not only creates great value for us, but when deployed, activates Azure consumption and data consumption, and activates Dynamics and Office 365 licensing and services for Microsoft, so creates a win-win relationship between the two of us. I mentioned that we're uniquely positioned as one of their premier partners that has this really powerful ability as an elite group that has full capability, highly differentiated with Microsoft, and one of their premier partners that they like to drive and introduce to customers, because we know and they know that together we're going to win. We have a great leadership team at the company. Phil, as you talked about, is an independent board director and somebody that I've known for 20 some years, really has a great understanding. Dave Giebert is our audit chair, head of a, part of several public companies. Gordon McMillan, who's also on the board and has great experience in the Canadian markets. Dr. BJ Jog joined us as part of an acquisition. And then our senior leadership team, all extensive experience in this market. We've got some of these guys have been with me 8 to 10 years. Tammy Anders and Kevin Castillo, both former Microsoft executives that joined our team to help lead marketing and sales at the company. Scotty Perkins comes out of Silicon Valley and led a lot of the product engineering and innovation work, and he leads our innovation team and our LedgerPay product. So with that, I'll kind of summarize it and talk about, where we think our market differentiation and opportunity is. We have this very experienced leadership team. We have this partnership philosophy and status with Microsoft that's unique, that creates a compelling capability in market. We've got a recurring revenue model that stems from managed services, licensing revenue that we achieve with margin contributions, and then obviously the high growth opportunity as a fintech within us for things like LedgerPay, where we build out recurring software services and licensing models. We have a consolidation M&A strategy where we're bringing together these very fragmented Microsoft partners in the marketplace to create scale, which is a key thing for Microsoft across their entire cloud platform. And then obviously the innovation that we bring by building out products. So hopefully this gives you a good taste of who we are and what we're about. Obviously excited about the opportunity. We've had a lot of good success and continue to see great opportunity in the marketplace, and happy to be able to share a little bit of our story. With that, I'll turn it over to the team, and we'll take questions.
Thank you, Mike. Great presentation. We're going to start with Chesley Morton. Chesley, good to have you on the call today.
Interesting and a little different for me. So I'm still trying to wrap my arms around this. Kind of a concrete example, maybe it'll illustrate your business. If I've got a local merchant that's doing about $10 million a year right now on Visa card, and he's paying them 1%, and you come and offer him your service, are you offering him an extra 1% that he can grab because you're not going to charge him, or you're offering him data mining, which he doesn't presently have?
So there's two things there. One is there's lots of fees beyond Visa. So any merchant that's processing does not process direct with Visa. They go through a payment processor, and they go through probably a merchant aggregator, especially somebody that might be a smaller merchant that's doing 10 million versus a larger merchant. So what they're going to be paying is, like I said in my model, like on the total, it's going to be, there's usually about 1.5 to 2 cents per transaction that are non-Visa or MasterCard related fees. And then on top of that is your Visa MasterCard. We don't replace the Visa MasterCard fees. That's unfortunately not yet part of our model. What we do is take those other fees that you might be paying, whether you're paying a Stripe as a front end to do that, or if you're paying a First Data or somebody else, we take and aggregate those fees. So that is one thing, and we think we can do that at or better economics than they're getting today. But more importantly, then we also add the value of giving them the ability to use data to act in a different way that creates a way for them to get value from it. But the Visa, what is called the interchange fee, that is the same no matter what. It's the incremental fees that everybody pays that we can help them control and lower that cost.
So if he's just basically bottom line oriented, he's still going to save some money, even going with you. But if he doesn't mine the data, do you do that? I mean, do you retain that data?
We have access to pieces of that data. That's where what we do is we don't take their details, because obviously that's proprietary to them, but what we have access to is aggregate data that we can then take and do trending to sell to those manufacturers, the Procter, the CPGs and others, who what they're looking for is not the details of it, but the aggregate data, and we can help them do that. And that's what the partnership with dunnhumby is about as well, not only activating it for that merchant, as well as helping that. I'll be honest, our merchants are likely going to be much larger in scale. We certainly can provide payment services and help do data services to, you know, smaller markets, but really it's more the guys that are transacting, you know, 1.6 billion kinds of transactions per year and spending 20, 30, 40 million dollars. Their data value could be 20, 30, 40 million dollars to them to go do that. There's a large population of those kinds of companies that are much larger in that scale.
Right. I just saw 10 million on one of your slides, as
Yeah.
I think 10 to 50 was a something in
that's
there.
the companies we're buying that do this, and that's on the M&A side. 10 to 15 is kind of the revenues that we would do as an acquisition versus customers that might take the LedgerPay product.
Do you think you'll eventually transition to some form of banking, like the Visa aspect of that, or are you strictly data?
We would not be a bank. The regulatory requirements, even Apple and others are resisting becoming banks. We would not be a bank, but we would have a bank association. It's called a bank sponsorship. Basically, bank sponsors create, merchant bank sponsors create a relationship with Visa. Visa is actually nothing more than an association of banks, by the way. So those bank sponsors create connectivity from a merchant side into a bank, and then payment processors sit in between them to do payment settlement and things like that. We will create a bank sponsorship, have connection to Visa, MasterCard, and others, and we will do payment processing for merchants as a component of that.
It's fascinating. Thank you.
Yep.
Thank you, Chesley. We'll turn now to Chris McIntyre. Chris, today, question for Mike.
Sorry, I'm okay. I'm okay for the question for now. Sorry.
Okay. We'll turn to Martin DeBovis. Martin. Martin, are you unmuted? Okay, Marty, Martin will come back.
I'm sorry, I hit the wrong button.
Okay.
So is there a large startup cost if you go into a new company? Or, I mean, and do you propose to the company that you'll sell them data mining products or inferential information that could be helpful to them?
Yeah, so the way we go into customers is there's multiple paths, but you know, we can go into a customer and just say, hey, look, we can take over your payment processing services as an example on the payment side, and that will take that over and do it at a different price point. We can go in if they already are, you know, at the moment that don't want to do that, but they really want us just to do the payment tokenization to give them insights into their consumer buying behavior. We can go ahead and provide them just the tokenization services and not necessarily do the payment processing just yet. So we can do that. So on the portion of it that's around the payment processing, we can enter at many different points and transact with them based on that. As we work with them in other ways, as we work with them on the consulting side to, you know, move their applications and their business into the cloud, those are funded by the customer to have us do those services to help them activate it, sometimes subsidized by Microsoft because of our strategic relationship with them.
Okay, very good, very interesting. So there's no real large hardware cost involved.
No, because again, that's the power of the cloud. The cloud is providing all the horsepower to do this, and that's provided by Microsoft, which is really an important thing about this move to the cloud. Companies can stop spending these tens of millions of dollars on hardware and refreshes and all those things. let Microsoft do that, who can do it at greater scale, at much lower cost economics. Typically the ROI for a customer moving from their current data estate, and again, these are, let's talk about mid-market companies, somebody that's 500 million a year in revenue to 5 billion a year in revenue, kind of as a mid-market. Those companies, that move, the ROI on it's usually less than 12 months. The other piece around that now frees up all kinds of capital for them that they can make investments in other ways. And sometimes it becomes less about buying hardware gear, but investing in software and services solutions that allow them to complement their product or offerings with customers to create new business outcomes and new revenue streams, which is really the really unique power of the cloud, and ultimately puts them in a much better position. The other thing is that Microsoft and even Amazon and Google and others that provide these, their security footprint in the cloud is so much greater than any single company could do on their own to secure their data and information. So it's becoming where it's so much more trusted to have your information in the public cloud than it is in a private setting. That used to not be the case, but the reality is now your data is way safer in one of those public clouds because of the engineering and work that they do to protect it, that each individual company could never do on their own.
Thank you, Mike. That makes a lot of sense. Thanks for your question, Martin. We're gonna turn to Murray Vanderveld. And Murray, do you have a question today?
Am I on?
Yeah, we hear you, Murray.
Okay. Mike, first of all, can you talk about your employees? How many do you have? How many are doing the software development, and how many are sales reps, or whatever you call them?
Yep, so we've got about 300 employees with the total in the company today. We have about 10 folks dedicated to the LedgerPay product today. And then obviously the rest of them are tied to working with our enterprise customers, doing all the cloud services and across project services, solutions innovation, as well as then the other recurring revenue streams. We've got 10 direct sellers across the company today, and then there's another 10 to 12 what are typically called like pre-sales engineers, but are technical specialists who complement the sales. So roughly about 20 folks who spend the bulk of their time selling to enterprise customers across the US and Canada.
So a large number of those employees then are actually engineers of some type. They're software engineers?
Correct, yeah. A high percentage of them are software engineers, infrastructure, cloud engineers, security specialists. We have data scientists, folks that really know and understand the holistic need for a customer to use this technology to create business value.
Now, let's talk a little bit about the relationship with Microsoft. Microsoft likes you because you bring business to the cloud. I guess that's the main reason why they're partnered with you. They want you to drive business to them.
Yeah,
as opposed to Amazon.
Yeah, so exactly. So Microsoft has this incredible platform in the cloud, but a customer, just because they choose Microsoft, nothing really happens, because the cloud is this set of great capabilities, but until it's actually assembled through engineering, through security, through integration services, other things, the companies actually don't derive value. Microsoft relies on a partner channel to do that. And they rely on a very small number of partners like us to do that with them at scale. So again, we are experts in helping do that and activate that for them. We're experts in helping the customer understand their journey to the cloud, why choose Microsoft over another cloud platform. And because of that, and because we're very dedicated to the Microsoft cloud universe, they introduce us to a lot of customers, including, as I mentioned, I think a little earlier, over 150 customers just in the last 12 plus months.
Does Microsoft not have their own team of guys doing what you're doing so that you're not competing with them to some degree?
They do not. Their model's not an IBM model. If you follow IBM, IBM makes most of their money on services and a little bit on other capabilities. Microsoft has a very, very small services function, and those are working with like major clients like a Ford Motor Company, where they're doing something very advanced or strategic. So no, the majority of the market, they rely on a third party to do that. That's been their model for 45 years.
Okay, so the last question. Competition or do you compete with Heartland?
No, Heartland is obvious where they were bought by Global Payments. If
Right,
I
mean Global now, yeah.
they're
Right.
now part of Global. They used to be a customer of mine a long time ago, but yes, part of their footprint. They have a whole host of services they provide. One of the things that they provide is payment processing under the Global Payments brand.
All right, size-wise in the universe, where are you? Are there 50 guys like you out there? 100 guys like you out there? I mean, I know you're trying to build mass with M&A, but
Yeah.
where are you sort of in the spectrum today?
Yeah, we're a mid-market player today in the Microsoft universe. Microsoft has this challenge. They've got tens of thousands of these really little guys, and little guys being 10 guys in a garage to
Right.
50 people or something.
Right.
They've got a small number that are bringing together companies. They obviously have the big guys, the Accentures, the Capgeminis, those big guys. The challenge for Microsoft and them is they go out. There's two problems they have with that big universe. One is those guys are only focused on the largest of customers. They want to go win $100 million contract somewhere, and they're quite good at that, right? But they're not really serving the mid-market. The second problem that Microsoft has with them is that they are, in fact, 25% of the time, they're a partner with Microsoft. The other 75% of the time, they're introducing Google, they're introducing Amazon, they're introducing IBM. They're actually a competitor to Microsoft. So it's actually one of the big voids and why people like Phil are so supportive of us and the Microsoft leadership, because we're creating a scale partner for them that is dedicated to their footprint so that they know when they go with us to a customer, we win or lose together. And it's a huge differentiator for us. Very, very few are doing that.
Very good point. Thank you. Oh, let somebody else ask them. Thank you.
Thanks.
Thank you, Murray, for your questions. We'll turn to Mike Cahill. Michael, question today? Mike, you're unmuted. Do you have a question? Nope. Okay, let's turn to Mike Hebner. Mike?
Yeah, you mentioned something, you were doing something with Walmart. What are you doing with them and what type of scale? And where are you going to get this takeoff where you're really going to add a lot of value? Because you said you're doing about 4 million in revenue or something now.
So a couple of things. One is nothing doing directly with Walmart. We're working with companies like Walmart who are exploring ways to look at use of this kind of data in the process, but not saying that they are a customer or anything today. The company total is a $42 million a year business today. The initial contract on LedgerPay is commercially sensitive, so we haven't given the total value. It's a several $1 million contract that we've activated just on that, but those revenues will start in Q2 of this year.
With the competition, how do you attract? Why does one of these software engineers? Why do they work for you, or why do they want it? What attracts them to your company?
Yeah, so it's the number one thing, right, is having talent in a people-driven business. And there's a few things. One is, first of all, our relationship with Microsoft being unique. They get access to training, they get access to technology. Some of the stuff we're working on is stuff that won't be available in the market for 6 to 12 months or more. So they get this very early insight and access to technology and understand it that wouldn't be possible. Secondly, is they get to work on these very interesting projects that we get access to, whether it's helping organizations write new applications using new capabilities in the cloud, things like that, which again, because of our position, the relationship with Microsoft and others, we are able to give them unique access to that. And then ultimately, our focus around how we deliver projects to customers and have this very robust set of services where we have programmatic approach, methodology, technology, and bringing that together. A lot of companies just don't have that recipe well stitched together, and And we've been very fortunate. We're able to get a lot of really talented people. And I've had people that have worked with me for many, many years through multiple companies because we try to make sure that we treat people, give them access to some interesting things, and try to have a little fun along the way.
What would would they buy you, or what would some other company, what would you have to do to make somebody really want to buy you?
Lots of big companies, Microsoft, that probably not going to buy that. Again, they're not in the services business. That's by design. So it's not really their mindset. Certainly doesn't mean that could never change, but for the last, I guess, 40 some years, that's been their mindset. There's lots of large companies out there that could potentially buy us. I get called every week that people would be interested. But yeah, so there's all kinds of different capabilities on an exit side. The more scale we create, the more customer acquisition we have. And then obviously the more we activate things like LedgerPay and doing those kinds of things, our value point goes up. But yeah, there's a fairly large number of large software and systems integrator businesses that grow through acquisition that could be a potential acquirer of the business someday.
Thank you.
Yep.
Thanks for your questions, Michael. We're going to turn to Scott Edmonds. Scott, questions from the audience?
Yeah, we have a few questions that came in. First one is, with LedgerPay and the the McDonald's example that you used, does the merchant require additional software hardware than they currently have in order to utilize the tokenization information that you provide? If so, who is building those integrations, or is that the LedgerPay system? Hello? Oh, 1 second. 1 second here. Mike has been unmuted. Terribly sorry, Mike. Can you hear us?
I can now. Yeah, you guys muted me along the way and I couldn't turn myself off.
That is probably my fault. I apologize.
So yeah, so if you could restate your question, I was trying to get that resolved.
Yeah, no, sorry everyone. With the LedgerPay system in the McDonald's example that you used, does the merchant require additional software hardware in order to utilize the tokenization information that you provide? If so, who is building those integrations, or is that the LedgerPay system?
So yeah, the software is the LedgerPay system. The LedgerPay system has modules, a tokenization capability, payment processing, gateway. In total, it can do all those things, and we can activate different pieces of that based on which set of services that particular merchant would like to take advantage of. If there are just taking advantage of tokenization, it's a software implementation that we tie into their systems and then activate that along with, for example, a dunnhumby into their data science and their modeling software that they take to market.
So someone like Microsoft can utilize you without having to upgrade their internal point of sale systems? Yeah,
it'd be very rare that anybody would upgrade. Most of the point of sale systems have an API structure that allows their point of sale to talk to gateways and payment processors because they have to, because otherwise they can't receive payment and settle. So we would just tap into that API connection, and that's a very common process in the industry. And again, we have the expertise through our team to go do that.
Excellent. Great. Next question. Are you now primarily a software solutions provider, or are you an integrator for enterprise business? And how is the business divided between these two streams of revenue?
So today we're both of those very clearly. We're a systems integrator that helps organizations leverage all the technologies from Microsoft and others to activate business capabilities, whether it's around data, around applications or whatever. And then obviously we are a software solutions provider through mPerform and now LedgerPay. Of the 42 million that I talked about, that does not include yet any of the LedgerPay revenue that's not yet been recognized because it just closed. About 85% of that revenue is us being a systems integrator, with the balance of it being a combination of the recurring revenues around product, around managed services, and then around licensing of the software that I talked about.
Great. And what is the size of enterprise that you target for integration services, and what size merchant do you target for your software solutions?
So on the enterprise side, we consider mid-market kind of a $500 million revenue to $5 billion revenue business. That's kind of the sweet spot. Obviously, we have exceptions above and below. We have marketing programs that work with smaller companies with and through Microsoft. Obviously, both relationship with and through Microsoft on our own. We have both a direct selling model, a with and through Microsoft selling model with dedicated marketing and sales support across all of those. But that's kind of the sweet spot is those. Similarly, you'll see that be a similar pattern where we're looking at anywhere from, again, mid-market. In some cases on the LedgerPay product in particular will be more upmarket in companies that are north of $1 billion a year in revenue.
Great. Two more. What is the current customer base for mPerform, and how does mPerform offer value to your clients? What's its real value add?
Yeah, so we got about 200 customers and a little over 200,000 users of that product. And really the core value of that product is employee performance management. So think about if you're a business owner or a manager and you've got a team of 100 people and or 500 people or 2,500 people, doesn't really matter. You can create a pyramid model where you have managers who have employees, you set goals and objectives, you have mechanisms to 360-degree performance feedback. You can do track achievements against that. You can do evaluations across the organization, do metrics for management and leadership to be able to do compensation. So it does everything from compensation management through performance management for the organization.
Great, and another one just came in. How do you see the revenue split longer term between systems integration and SaaS? Now at 85-15, longer term, do you see 50-50?
Yeah, we believe it'll be 50-50 with growth on both sides of the table. We think that the LedgerPay business by itself has an incredible growth curve opportunity. And then obviously we'll continue to think about products like mPerform or maybe a next LedgerPay as we go forward as well. But then continuing to grow the consulting business through a combination of organic growth with a goal of growing organically in that 20% range, and then also acquisition growth that gives us scale and reach, which is a big part of the strategy. So yeah, we anticipate both to grow, but I would see over time being a kind of a 50-50 split of product SaaS-based solutions and then systems integration and managed services and other kinds of services on that side of it.
Great, and one final one has to be about COVID, of course. What do you think the impact of COVID on LedgerPay sales and your integration business overall will be?
Yeah, you know, there's certainly, I tell everybody there's gives and gets. We've got some customers who are more impacted in the near term by COVID and especially any of those that are in more of a direct to consumer business entertainment. The good news for us is we don't have a big segment of our business in that space. And then on the opposite side of that, so those are kind of the gives. We see some of those where customers may be slowing down or doing some things at different pace. The others we are seeing, there's a couple of different dynamics. One is, as they've had to try to transition to a remote workforce, they've not had to do that before. Now all of a sudden they're asking us to help them enable their remote workforce, and the cloud is a great agent to do that. So whether it's things like collaboration tools like Teams and helping them integrate and create that, making applications more accessible in a cloud world. So we're seeing this demand from that occur in parallel. So the two of those are, you know, kind of offsetting things. As we look at LedgerPay, obviously, there's certain merchants that might be targets of ours at some point, but today would probably not be, that are maybe some of your big brand boxes that you know, are in a distressed state just because of the current environment. But if you think about things like grocery, quick serve restaurants, dollar categories and convenience stores, they're actually doing quite well. In fact, having some of their best performance. So companies like theirs are in a much better place to think about investments. So we actually, part of what we have to do is look at our pipeline, look at our go-to-markets, and that's part of what you saw in our announcements with dunnhumby. We're targeting segments with them right now where we think the opportunity best suits their value, as well as they're not distracted by maybe some other major disruptions. we'll obviously continue to monitor that and understand, but we're very mindful of that, knowing how we think about growing our business and those companies. But actually, one of the best targets for us in the LedgerPay is actually a segment that has done quite well as a result of COVID and some of those things, just because of the way a demand for some of those services has been driven. And we think there's an opportunity to take advantage of that and position the product in as part of that mix.
Great. Well, that's all from the field.
Thanks, Scott. Thank you for all the questions. This concludes our call, so we'll turn it back to you, Mike, for our closing remarks.
Wonderful. Well, thank you guys all so much for taking some time to be with us today. Hopefully you got a bit of a perspective of our company and what we're trying to do. We think we're this really interesting opportunity. On one side, our Microsoft partnership and this growth mode that we have through organic and M&A growth to take advantage of this cloud journey that customers are on in the very early stage of that is a great investment thesis on its own. That's going to be a very focused growth model, very accretive through our acquisitions, and by itself a great investment opportunity. But then we have this unique optionality that helps differentiate us. We have this fintech play that has this really interesting point, again, driven through some really strategic partnerships with Microsoft as well as dunnhumby to help give us brand permission to play, which is unusual for a startup company. So we kind of have this ability for you to, from an investor, have this very growth-driven model through a proven business path, while also giving you this what is an optionality, if you will, through the fintech play that we're making in the unique position we have. And certainly would welcome to share more information with you guys as we go forward and answer any questions you have. So appreciate the time today. Certainly hope all of you stay healthy and safe, and look forward to future conversation. Take care and have a great day.
Thank you very much. I want to wish everyone a pleasant afternoon. Thanks again for your attendance.